If you look at trade between the US and Mexico, really about 2/3 of that is intra-company trade. So that means that this is not just about avocados and fruits and vegetables. This really is US companies that are using Mexico as a production facility and therefore basically putting goods back and forth over the border, in some cases for the auto industry several times. So in that sense,
can you just give us like an example of what that means and why it's so important?
Because that means that at the end of the day, a lot of this really has to do with that it's really not so much necessarily sensitive to the exchange rate and what the peso is doing. It really is US companies that have used Mexico as a production facility to basically do things cheaper because labor is cheaper, putting things together has been cheaper, and that's basically resulted in this very integrated, basically supply chain that we have today. So in that sense, the answer to your question is, this is not about two countries producing wildly different things that are battling with each other. It really is a very integrated network that's going to get hit as a result of this.
I mean, does that make it more painful than if this were just straight up like China, imports and exports?
It really is like separating your spaghetti bowl and your pasta afterwards when you have cooked it, because you really have a situation where things have really gotten so intertwined that it really is hard to disentangle what the consequences will be. That's also why, from a market perspective and from a GDP perspective, we really don't have any good estimates. First of all, of course, of how long time it will last and where we'll go on the tariffs. But most importantly, we really don't have a very good estimate of what is the ultimate impact on GDP, other than it will most likely be negative.
Some people pointing to the fact that the Mexican peso has weakened. Had that weakening been exactly 5% and the tariffs went in and stayed at exactly 5%, would the effect be zero, or because of this complicated relationship, is there still a big negative effect?
Well, one thing that's an issue that's a bit unclear from the tweet yesterday is that this is on the value of goods that come across the border. And some automakers, they go across the borders like 7-8 times. So if you have to multiply 5, 10, 25%, 7-8 times, you get a really magnified effect. So there's a lot of unanswered questions in terms of what are the implications exactly in terms of how much extra should you add onto prices in the U.S. as a result of this new tariff.
I mean, Steve, you said at the top of the hour, sort of, let's wait to see what happens on Monday. Don't panic if you're an investor. Why do you have that attitude? What do you think happens next?
Because, first of all, this is all a hypothetical situation here. We don't know if it's actually going to happen, and we don't know how long it's going to happen. This is a push. President Trump, his base, wanted them to build the wall, right? He was going to have Mexico pay for the wall. This is his way around it. They're going to pay for this pseudo wall at this one way or another. So what I say is...
Except for the U.S. consumer is going to pay for it.
Well, the U.S. consumer, first of all, rates are low, right? We have zero inflation. There's a lot of things. We have a tax cut that was given to the American corporations and American people. There's a lot of things that counteract whatever higher prices they're going to pay.
Torsten, do you adjust your likelihood of a China trade deal now? Because presumably anybody will look at this action on an ally that has done a trade deal with the U.S. already and question what is the point of ever doing a deal with this administration?
So I know, and all day this has been a discussion with clients. I mean, is this an attempt to try to have more trade wars? Is there something going on in one area where you want to lever up and then lever down in the other area? I mean, it really remains at this point relatively unclear what the strategy is in terms of, are we pulling in one string and not in the other? Are we basically pulling in all strings at the same time? So this is a really important, ultimately political question that's just really difficult for investors to see.
Why is this so difficult, though, when you think about it? President Trump has this country has an immigration problem, right? So whether or not some people say we don't have one, we have an immigration problem. We have an illegal immigration problem. This is his way to try to handle it. So we're all getting caught up.
It came as a total surprise to the markets, and it's a tariff which has been used, according to this administration, to deal with unfair trading practices, maybe as a more...
So should he worry about the news flow comes as news flow comes? It's always a total surprise to the overall markets whenever you have a new dynamic to news flow. This market has been worried about the Fed. It's been worried about Brexit. It's been worried about China trade. Now it's worried about Mexico. I will say that the only thing this market should be worried about is the Fed. If the Fed is still dovish, all this stuff falls into place.
But, Steve, are you saying with the S&P 500 down 1.2%, that the market is not expecting these tariffs to fully materialize? And if they did fully materialize, you think that there's more downside?
So I think that the market is trying to assess what the market can today. So to Sarah's point, it came as a total surprise, so the market overreaches with total surprise because the shoots firsts ask questions later. So now on the month end, where we had an MSCI rebalance in the beginning of the week, now we have month end. People are squaring up their books. That's what professionals, traders do, and institutions. They'll square them up. Let's see where the chips lie on Monday.